Good afternoon. Today is Thursday, November the 16th. The time right now is 1:05 in the afternoon. Now, last night we have the release of the producer price index as well as the retail sales. Market did not quite react the same way that the market did on the release of the CPI numbers the day prior. Now, we can recap a little bit. On Tuesday, we had the CPI numbers that came in cooler than expected, and market took off. When I say market took off, of course, I'm referring to equity markets took off and the dollar tanked. And last night set of numbers also points to the same conclusion in which the producer price index also eased off, as well as retail sales took a tumble from the September number of 0.7. It came in only at 0.2. So again, that basically tell us that the economy is cooling down. Inflation is no longer a major concern because the trend suggests that inflation is coming off, and that means the Federal Reserve will have less incentive to actually hike rates going into the balance of the year and perhaps even into 2024. However, the reaction couldn't be more different. On Tuesday, the equity market surged, and last night, even though the market actually came out with a set of numbers that should also encourage a surge in equity markets, it did not. In fact, it came under profit taking. Although so far the profit taking has been very, very mild, but that was a major contrast to the same effect that we see in the release of the CPI numbers. So right now, what we can see in the maybe I should refer you to the Dow Jones first. Now, the Dow Jones actually hit a height of 35,104 in the futures contract, and basically closed just above the 35,000 levels. And this is a surprise because I was expecting price to extend higher. So that was the sentiment going into yesterday's trading. So today we have no major economic data released for the United States. So I think the market is going to drift, and there's a possibility the profit taking that we saw last night may actually extend into tonight's trading in New York. And in the S&P 500, in the micro E-mini futures, we can see that the index itself, the futures trade a high of 4,542 even, very, very near to a bracket of prices, which I believe is likely to cause prices to be kept. And that level is 4,556 and a quarter to 4,566 even. So I do believe if there's going to be more profit taking going into tonight's trading, there's a risk that the market may actually pull back a little bit deeper to the origin of the move before the market took off on Tuesday, and that level is 4,407 and a quarter, and to 4,437 even. So this is basis the micro E-mini S&P 500 futures. In the micro E-mini Nasdaq 100 futures. Similarly, we see the market top out at 16,049, which is into a bracket of prices where I also expect the price to come under some kind of resistance, and true enough, the market did. The level is 15,947 even to 16,062 and a half, and there's a possibility market may continue to pull back into the origin of Tuesday's move, because you can see that there's a major spike in prices, but prior to that there was a bit of an accumulation. So if price goes back into this level of accumulation, is 15,465 and a quarter to 15,588 and three quarter, I think there's a very good chance it will hold before it base itself for another extended rally going forward. Okay, and so far the market right now, at least in the shorter time frame, suggests that we're going to see further gains in equity prices in the States. And over in, let's say, in Asia, we can see that the Nikkei for today, the high is at 33,620, which is right inside this bracket of prices, which I expect some kind of profit taking or even the re-emerging of selling interest. That level is 33,590 to 33,810. And again, very similar to the outlook in the US equity markets. There's a possibility the market may drift lower to the point of origin before the market start to take off on Tuesday. And that level is 32,670 and to 32,800 in the Nikkei 225 futures. Over in Hong Kong, the similar things. This morning we have a massive pullback in the Hong Kong equity, the Hang Seng Index. We can see that the futures actually top out at 18,429, which is well into this bracket of prices, which I've previously highlighted to be an area of possible re-emergence of selling interest. That level is 18,392 to 18,572. And so the high here actually correspond with the outlook of fierce resistance coming in, and the market took off, not took off, the market actually pulls back very, very deeply. So far right now, we have a massive 50% pullback in the term of the rally itself. So we can see this level here, the market has come back 50%. Okay, so at 17,783 is where the 50% mark is. Currently, market is trading at 17,800 with a low so far in the morning session at 17,737 in the futures contract. So you can see that in Hong Kong the prices are pulling back. So let's see what happens going forward in the afternoon session. As far as the dollar is concerned, the dollar actually have a mini crash on Tuesday, right after the release of the CPI numbers, which actually market participant betting that the Fed is unlikely to hike rates going forward and maybe even cut rates into the middle of 2024. So that saw the dollar being sold off. And yesterday we have a minor breach of a low, which is the Tuesday low at 103.84. So last night we have a minor breach here in the futures contract at 103.81, minor before the market bounced. So this bounce is seen to be a corrective pattern. I do believe that the down move in the dollar may not be over yet. There's a possibility the market may continue to edge higher into this bracket of prices between 104.56 to 105.25 0.025. Okay, but anyway, there's a swing low here which I think may actually hold. That low here is 104.67. So I am basically long the dollar index going into last night's trading as a legacy of my open position on Tuesday late in the evening session, where the market actually go down to my price, and I've got in at a good price, and I'm trying to get out at just marginally above at 104.56 levels, just ahead of this low, this swing low here at 104.69. Okay, and in the euro dollar, the pullback in the currencies may actually extend a bit lower. We do not have a new high yesterday. The high traded on Tuesday was 108.87 in the euro versus the dollar, just shy of the 100% equality move at 108.96. So we can see that the price has gone up, and we have these two set of a three wave, which actually rose just a little bit short of the ideal target, and I think the market may actually pull back. And the market pulls back to the point of origin before Tuesday's rally. We can see that the area is 106.90 to 107.06 level in the euro versus the dollar. Now the sterling have a different structure. I think the sterling technically looks a little bit superior to the euro dollar, and I think this run up in prices, although it is very corrective in nature, but we have a pretty strong impulse up move here, suggesting that there is some kind of strong buying interest, and that should actually continue to extend higher, ideally with a pullback right now into the 38.2% retracement from the low of 121.87 to the overnight high of 125.06. So the pullback here is at the 38.2% retracement. It should basically hold, although there's no chart point here. I think the market may extend higher going forward towards the weekend itself. Target is at 126.12 to 126.43. Over in the Aussie also have two very strong move, okay, suggesting that the buying momentum is still very much intact. The market has pulled back to the 38.2% retracement levels. You can see the high overnight is 0.6542. I think the market may actually hold within this area of 0.6440 to 0.6464 before it extend higher beyond 0.6542, heading towards 0.6625 to 0.6635. Though dollar Canadian do look a little bit weak right now. So if there's going to be a rebound, this will be a great area to actually position short. The area is 137.27 to 137.49. So this area here represents the 38.2 retracements of the entire move here from 138.43 down to 136.54. So either the 38.2% retracement or the 50%, ideally at the 50%, that will be at 137.49. So anywhere between 137.27 to 137.49 will be a great area to actually position short for a extended decline all the way in the three-way pullback, ideally heading towards 135.78 to 135.98. Okay, dollar yen does structurally suggest that we may see further downsides, although we have an uptick yesterday from a low of 150.04 all the way to the high of 151.42, but right ahead, I think there's going to be some kind of resistance here at 151.61 to 151.79. Not sure whether the market will attempt this level, but by and large, I'm still looking out for reason to sell for a technical pullback in a three-wave structure, ideally heading towards 148.80 to 149.10. That finished the currency pairs. Let's take a look at precious metals. Now, precious metals remains very, very strong now. especially now that the dollar does look a little bit wobbly. Any further profit taking in the dollar will actually be beneficial to commodity prices, especially gold prices. We can see gold actually hit an overnight high of $1,975.43 from a low of $1,931.69. So this is actually building up to be a three-wave pullback, and the market could be getting ready for a surge beyond $2,009.56. Immediate target is about $2,038.90 to $2,053.05. Okay, in the silver market, we have a triple top there currently in place. Not sure whether the triple top is going to be the barrier to higher prices, but because of the surge that we saw on Tuesday, this is actually quite conducive for the scenario in which I think precious metal as a whole may actually extend beyond the $23.70 cap that we see so far. If the market can actually take out this level at $23.70, it has a potential to hit all the way to $25, perhaps even $25.26, which is the next barrier that I aim at. Okay, and over in the oil market, you can see oil, despite the commodity prices being beneficial because of the decline in the dollar, you can see oil prices actually came off because of increased storage. The inventory actually increased during last night's release of the EIA report here. So it's, at this for now, the market is coming back down, but I think overall, I do believe it is a buy in crude oil, and I do have a target here. Now, there are two scenarios. If the market can stabilize where it is right now, which is currently trading at about $75.90, if it can stabilize where it is right now and kick higher, once it take out this nearby resistance line beyond the $83.56, I think there's a very good chance market may actually go even higher. But for now, this resistance line should be where the market could be capped at. Now, if the market do dip a little bit lower, another buying range for me will be $72.64 to $74.11. That actually offers me another chance to buy on the dip. Okay, but overall, I do believe crude oil prices is likely to go even higher. Now, the interesting one is actually Bitcoin. Now, Bitcoin moved 5% last night from the low of just under 35,000 all the way to test the 38,000, which is the a test of the previous high 1 week ago. Now, this is exactly November the 9th, where the high was traded at $37,973.94. Now, yesterday high was actually very interesting. It just barely took out this level. In fact, it missed taking out this level just by one lousy dollar. So the market right now is pulling back. But you can see that the overall sentiment suggests that we're going to see higher prices in Bitcoin going forward. I was hoping to see the market dip into this barrier of prices initially, but the market dropped short at $35,963.82. The bracket that I was looking at was $34.104 to $34,741. No, 740. So that was an ideal place to actually pick up some more Bitcoin. However, it did not quite get there, but right now I think the market has enough momentum to actually try the 40,000, which is the next round number here. So 40,000 target looks to be quite doable. So in the meantime, you do watch out for that. Tonight we are going to expect a pretty quiet night. So this could be a condition for profit taking as well as a surprise move. So this is all I have for you for today. In the meantime, you take care, and I'll come back to you tomorrow with another update. Bye-bye.